It is Sunday, 4/21. I have a little bit of allergies, so sorry if my voice gets all messed up. But I'll take you through the account. We haven't visited it since about Friday. Actually, longer than Friday. It's been a while, but we're going to take you through the account. And then what I want to talk about today is a really common misconception and something I've been hearing a lot lately. I've been listening to a lot of podcasts about actually precious metals because I'm thinking about going back into silver soon because my favorite company XK has been getting down to the lower range of what I think it's worth. So I might start to scale back into that position. So we're going to talk about some of the common misconceptions that I hear analysts and YouTubers and podcasts and money people that always appear on these shows, arguments that they use about gold and its valuation, and especially when it comes to the valuation of miners, and how I think it's wrong. So let's move on. Let's go into the account here, and you'll notice that I'm sitting at $56,810. There's some weekend action over here because I have like $30 of Ethereum or something silly like that. So that's why it's moving. This is what the week looks like. That's an awkward looking week. Month up only 2%. Over the last 3 months, 17%, 18% almost. This is the year, and this is the all time. I started doing taking this account seriously about July 1st. All right, this is what this year's looked like. It's been pretty favorable. So recent trades. This C-SPAN call that I've sold. I don't know. I'm hoping that the C-SPAN stays above $10 because if it does not stay below $10, excuse me, I'll be forced to pay out the dividend on 200 shares worth of C-SPAN stocks, and I don't want to do that. So I might actually be losing money if it goes a little bit over 10. All right. Now, in other news, some of the option trades that I've had expired, and Apple keeps on gaining, which is kind of scary because I've sold a 2012 and 50 cent call against Apple for the 100 shares that I own. It expires on May 3rd, so Apple needs to stay below that price by May 3rd if I want to keep it. Otherwise, I end up selling it. Yes, for a little bit of profit, but still a little bit scary. As I mentioned, precious metals are quite a bit down. As you can see, XK is all the way down into the 220 area here, so it might be time to start scaling back in. Sold quite a bit. I show you guys. I sold like over thousands of shares already. I'm only left with 400 shares of EXK, which I wanted to even scale out of those, but the price never reached the $3 mark there, so I didn't sell. Now, as it starts to go at $2 and below, I'm thinking of scaling back in. So maybe tomorrow will be a good opportunity to do that. All right. Nothing too interesting. Sorry, I have bad allergies. I'm on the medicine, but hopefully it takes care of everything. And that's kind of why I haven't been making videos in the last few days because I've been sick, or not sick, but just allergies messing up my voice and everything. So anyway, nothing too exciting with the rest of the account. So what we're gonna do. Oh, by the way, Robinhood Gold had a couple updates and now gives me free. They changed the way they do their margin accounts, and now it has like free research on some of the companies that you're thinking about investing. I think they have some Morningstar research there for the gold members, and they rate the stock and they give you a little bit of information about it to help you make decisions. I don't know if I find it all that useful, but that's just, I think, my style of investing is that I'm quite contrarian. So I'm gonna probably talk about that maybe on the next episode or sometime in the future. But for now, what I want to talk about is this idea that when valuing precious metals, miners, or actually any commodity, when you're valuing the miners, people erroneously sometimes talk about the cost of producing the metal and how that is going to impact the price. And yes, that has impact, but it's really a case of the tail wagging the dog when it comes to all-in cost, all-in sustaining cost, and actual price of the commodity being mined, including gold and silver. So what ends up happening is the production is actually dictated by the demand, by the price, right? The price comes first, and then the production is decided. So there are deposits in the ground that are viable anywhere from, let's say, $700 per ounce of gold to, you name it, a million. All right, like you could literally extract gold from the ocean water. All right, but that's going to take so much money. However, if gold was that expensive, right, there was a million per ounce, not only are all the gold deposits going to be mined out from the earth, but people will be going ocean gold fishing. Okay, they're going to start filtering out gold flakes from the ocean water because it's so valuable, right? It's going to be worth their time. So that's the actual mechanism that drives gold production. And I have a little chart over here to show you. Um, let's go into the browser here. And you can see I've borrowed this from nextfinance.net. I guess I should give them credit. So as you can see here, every time whatever the gold price is, the all-in sustaining cost rises up to match that, and roughly. And yes, the bigger the prices, the more the margin, and the more profitable the miners become. But as it starts coming down, as you can see, the cost of the commodity actually decreases. Now you be thinking like, how does that work? If the price of the commodity, for in this case gold, goes down, wouldn't it be the case that the cost still stays up? The cost of production stays up, and now all these miners are losing money instead of actually making money. Well, no, because what happens is they don't actually mine those deposits that are very expensive to mine. They shut down production. All right, so they shut down production at their expensive deposits, and they start mining the ones that are actually profitable to mine. That's how they run profitable businesses. Otherwise, even though it is the case that in recent years, especially in the beginning of last decade or this decade, many mining companies have been mining at a loss, expecting higher and higher prices, and that's kind of one of the factors that led into the crash of 2011, where gold and silver collapsed, as well as other commodities. But because of that overproduction. But the point is that miners are adjusting, right? If the current price is $11 per ounce in silver, they're not going to be mining it at 15, right? They're going to cut production, only use those deposits that are worth mining, or they could gamble. And when miners gamble, sometimes they lose, and that's why some companies lose more than others. Some miners are strictly committed to following the price, and they run a very tight margin, right, between their cost of production and the actual price, and they're really careful not to get caught gambling too much with the price. And sometimes they even trade futures on their own production, so to make sure that they hedge it and they have some insurance against it. And they know that kind of, in a way, they've sold in advance in order to be able to run their business properly, because the commodities mining business is pretty brutal. So any kind of insurance is welcomed, and but they still take risks. They still take a lot of risk. It's a competitive field, but I just wanted to really make that point and explain to people so we can finally stop using it really as a point of reference when it comes to price of the commodity. Right? It's not the mining cost that determines the price of the commodity. Is the price of the commodity that determines what the mining cost will be. All right, for the most part. There's some back and forth, but like I said, um, the miners are just based on the demand and other factors. All right, based on the um, how desired, the commodity is, how much demand there is for it, and what that is relative to the supply, and where that strike price is, and that's the information they use to determine their future supply. Okay, that's just a little tidbit. Next time, I'm thinking I really want to talk about why everyone is wrong about the market. All right, that's gonna be kind of a maybe a controversial thing, stream of thought that I'm gonna be having, but it should be fun. All right, I think that's about it for now. I'm thinking what's going on with my mouse right now. Anyway, that's it for now. All right, peace out. Hello. This is gonna be funny. I don't know why it's not stopping. Okay, mouse malfunction. I think this is about it. Peace out. For real this time.